welcome all. Welcome to the second part of a podcast, Navigating IPOs in India, a complete expert guide. So, in the first part with Mr. Sandeep Gupta, who is a chartered accountant by profession and a director in a SEBI-registered merchant banker named Valmiki Leela Capital Private Limited, we have covered all the discussion about basics of IPO, that is what is an IPO, disadvantages, advantages of an IPO, regulatory intermediaries role, process of IPO, then price band, how to decide price band, etc. So don't miss the first part of the video. I have mentioned the link for the first part in the description box. So let's start. So in the second part, we will cover the questions from the investor's perspective, like how to apply for an IPO, categories of the investors, IPO allotment, factors to be considered before applying for an IPO readiness of the company. That is, if the company wanted to bring the IPO, then what should be the readiness from the company's perspective, challenges, opportunities for the professionals, and advice for the first-time investors, etc. Welcome, Sandeep. How can a retail investor apply for an IPO?
So, as of now, the process has become very simple. So, if you talk about 20 years before, this used to take a very time job. Okay. So, you have to go to a bank, you have to go to your broker to apply an IPO. It's a physical process.
Right.
Now, SEBI has digitized the entire process. Now, we have to understand first two things. In an IPO application, there are two parts. First is the IPO bidding, and second is the IPO banking. So for bidding, you can bid through a net banking. You can go to your bank and fill a form, then apply. You can approach your broker, who can again apply for on your behalf the IPO. These are the bidding process. Now for banking, always bank will come into the picture. So for banking, either if you are going to a bank, they will do your banking on your behalf. See, if you are going to a broker, then now as of now, SEBI has given for all the syndicate members UPI application. So now, once the bidding is done, the pop-up will come in your application. It can be Paytm, it can be PhonePe, and the UPI application is there. So you can do your bidding from your phone. So it takes only fraction of seconds to apply for an IPO. So process is very simple. You need to have a PAN card, you need to have a demat account. Okay. Now, if these things are okay, then net banking or through your broker, the particular company's detail will come. You have to apply, select your amount, how many shares, at what price you want to apply. Then it's a book will IPO. So you can apply for that. Bidding is done. You have to approve your mandate, ensure that sufficient amount is there in your bank account. Now there are few things to be kept in mind. So say for example, do not apply from multiple banks to different account, it will get rejected.
Okay.
So, and assuming say you have applied, your demand is not active, so the shares will not come to your account. Right. So even if you got the allotment,
it will be automatically
rejected. Right. So active demat account, then you can say a proper sufficient bank account, then not applying from multiple demats or single bank, it will help you to get allotment.
Okay, but we can make multiple applications, like an applications number of 4 applications.
So you can enhance your application. For example, you apply for 2 lots. So if you feel I have to apply 5 lots, you can increase your application size.
Okay. But it should not be applied from the multiple.
Say if you do 2 demat accounts, one is an HDFC, second is Zerodha.
Okay.
And either of them, both of them will get rejected.
But if I am applying for the same demat account from 2 banks, for say SBI and say HDFC,
no, it won't allow you.
Okay, it won't allow.
Either it will ask you to update because they are aware that you already applied for the application.
Okay, so it's PAN based. They can
it's a
track
PAN based, yes.
PAN. Okay.
So RTA. So once IPO is closed, as we were talking in the previous session, they will evaluate they process millions of applications. So they have system, they will process PAN based, then your demat account based, they will evaluate duplicate bids, multiple bids, and your application will be rejected.
Okay, so now applying in IPOs are only click aways.
Yeah,
few clicks and you can easily apply.
You can apply from net banking within fraction of seconds.
Okay, if your demat, PAN, everything is proper, then you can apply. Okay. What is the application supported by blocked amount, and that is ASBA, and how does it work?
So for that, we have to just go in history. So before 20 years back, what used to happen is the IPO allotment entire process used to take 15-20 days. So assuming you have to apply in IPO, then say you are applying say 50,000 rupees in an IPO, your money will be debited. You have to issue a check. amount is debited and it will be into the escrow account of the company. Now, this process used to take a lot of time. To strengthen this process, to create a transparency, SEBI has come up with the 2015, they came up with the ASBA process. Basically, it's an application supported by a blocked amount. So what will happen once you are applying, the amount, similar amount will be blocked in your account, and if see you're getting the allotment, amount will be debited, it will go to the company. If you're not getting the allotment, the lien will be removed. So basically, it's a more safer way for investor to apply an IPO. So assuming you apply for say 1 crore of application. So in a previous scenario, where money will go to the company, you won't be getting the interest on that, and there is a risk, there will be a delay. So in ASBA, your amount will be lien marked. You will still getting the interest on that portion also. So that's the best part of ASBA. So in ASBA, your money is safe. You will be basically charged or debited for the amount of allotment that you applied for. So comparing to the previous the history, now this process is very easy and safe.
So earlier you have to apply for the refund, or you may get the refund.
Yeah, there may be some
but
delay.
you have to keep an eye whether I have received my refund amount or
Exactly.
not. But in ASBA, if application is rejected, you will automatically block,
Within a day,
unblock the
within a day, your amount will be unblocked.
Okay, so that's very safe and convenient from the perspective of investor.
So this also increases the churning for IPO investor. They can apply in multiple IPOs.
Correct.
And once the amount is unblocked.
What is the UPI-based IPO application?
As we discussed, so SEBI has mandated so before COVID in 2019, luckily before COVID started. So earlier, the physical movement of form used to happen. Of say at a particular branch, 10,000 application is there. So similar kind of application would come to another branches also. But these all forms will be collected at a collecting center, and then they are bidded for the bank. So this process used to take a lot of time. Now what SEBI has done is basically they have digitized the entire blocking process through UPI. Now once bidding is done, in your application for as we discussed, Paytm, PhonePe, and the UPI app, the similar pop-up will come. You just accept, put your PIN, and you can apply for IPO. So earlier this amount limit for this amount was basically 2 lakh rupees. Now SEBI has enhanced the amount to 5 lakh rupees. So now earlier retail investors were supposed to use this application. Now, so up to 2 lakh, it's a retail application. Anything more than 2 is basically a non-institutional ultra HNI application. So 5 lakh rupees the application also can be done by through a UPI.
What are the categories of IPO investors?
So generally on a broader base, the investor category is divided into 3 parts. One is a QIB, it's a qualified institutional investors. Second is basically retail investors, and third is basically non-institutional investors. So for retail investor, you can assume anybody who is applying for a IPO amount less than 2 lakh rupees, he will be classified into a retail investor. Then there are QIB investors. Basically, QIB investors are the investors who have received a QIB status from the SEBI. So this includes your mutual fund, your insurance company, your AIFs, then your pension companies. These are basically QIBs. So purpose of classifying this was QIBs are informed decisions. Then retail and basically they have very limited ticket size, but they are good in quantum.
Correct.
HNIs, the ultra HNIs, what we call, they are basically somewhere in middle, higher than retail but less than the QIB. So QIB, then they get the higher allotment in the IPO. It is more than up to 50%. Retail is basically not less than 35%, and the non-institutional is anything more than 15%. So that's a split.
Okay. So I just missed to ask one question: whether the physical applications are also allowed for the IPO?
Yes, you can do the physical application, but as India is going towards a digital, so majorly as of now, people are using the e-platforms. But still, there are good investors who use physical form. They go to bank, they take a form. They will take a form from a broker, go to bank, and then apply. So they are okay with the process.
Okay.
So
there is one age of people
yes,
who are not convenient with
the tax system. Yes.
Okay. So it is also allowed physical and digital.
It's allowed.
But digital is more preferable and
yes.
convenient.
You can track your application.
Correct. What is an IPO allotment in society?
So IPO allotment is basically a lottery system and a proportional lottery system. So since purpose of creating a category of investor was to ensure optimum allotment of the shares. Assuming you have 100 rupees of shares to be allotted, now 50 up to 50 will go to QIB. Now that 50 ka 60% is basically an anchor investor.
Okay.
So the split will be 30 anchor, 20 general QIB, 35 for the retail, and 15 will be for non-institutional investors. Now anchor is basically an arbitrary allotment.
Okay.
Now, as per the wish of the company and the merchant banker, we will decide whom to give how much.
Okay.
So they are a very informed decision. They will stay in the company with a longer time and they have a lock-in period.
Okay.
So they will get a confirmed allotment. Now in QIB, we have a proportionate lottery. So application in the IPOs works on a lot system. So lots are decided. So say 500 share of lot, then 500 in multiple of similar lot, 500, 1000, 1500. So application will be done in similar space. So what will happen? For each lot, particular categories will be created. Assuming from 500 to 5000, you have 10 categories.
Okay.
So all the application to similar category will be parked, proportion will be created, and assuming I have to allot 50 into these 10 categories, these 50 will be further distributed to these categories.
Okay.
And then lottery will happen.
Okay.
So highest number of application into particular category will get highest allotment. Now this is for QIP. Similar application happens for the non-institutional investor. But for retail, it is 100% lottery. So assuming minimum application in IPO for a retail is 15,000 and higher is the 2 lakh. So basically, in the basic calculation, around 12 lots can be applied for 2 lakhs of categories. Now all these 12 lots will be in a single pool.
Okay.
So even if you are applying for a 1 lot, somebody is applying for a 2 lot,
Okay.
they have a similar chance of getting the allotment.
Okay. So this is not like if I am applying for 10 lots, then I'll get
You
more
have the
chance.
high chance. No.
Okay.
Even the 1 lot, what will happen in this lottery also, I will ensure everybody gets the minimum shares.
Okay.
So this will start from 1 lot. If you have applied for 1 lot, 10 lot, I have applied for 1 lot. And the minimum lot is 1 lot only for allotment. Then you will also get 1, I will also get 1.
Irrespective, I have applied for 1 or more than
Yeah.
Okay.
So
But is it like that if I am applying on the first day for 2 lots and on the third day, last day, I am applying for more like 4 lots, then will it consider as the same for?
So there's a mix. There are people say you apply on day 1, you get allotment. You apply on the second day or third day. So system does not identify on the date of application. Basically, they will pool the entire application irrespective of date of application.
Okay.
You should be applying within the window period.
Okay.
So everybody has the fair chance of getting the allotment. So this is the best part what SEBI has done. So even unknown person into tier 4 village has the equal chance of getting the allotment in the company if he likes the company. So it's a lottery based system for retail, and for other category it's a proportionate lottery,
Okay.
and then for anchor it's a arbitrary allotment.
Okay, but if even a single person cannot get the 1 lot, is it possible?
100% possible. What happens if say minimum lot is, assuming I have 50 lots for allotment in retail category. Now I have investor only, I have 30 investors, for example. What will happen? Every 2 will get 1. So out of 2, 1 will get 1.
So there will be again lottery.
Yes, so we try to get minimum allotment first. If that is also not sufficient, then it will be 100% lottery.
Okay. So
So
how
the
does
system-
lottery work?
System will generate random numbers.
Okay.
So say I have 1000 investors. System will say you give investor number 5 this allotment.
Okay.
So SEBI plus the stock exchange has created a platform
Okay.
where it's a very transparent platform. The system will give you the numbers, and basis that RTA will do the allotment.
Okay.
So even RTA is not aware, merchant banker is not aware who and how much allotment will be done. It is done by the system created by.
So there is no involvement of any person.
Nobody can do this.
Okay. It's completely system based, so there
Yes,
will be unbiasedness.
Zero. So as of now, all the allotment those are happening as far as we know and as far as the market practice. 100% transparency, 100% of fairness, equal chance of getting allotment in the IPO, except for anchor investors.
That's very good that it's everything is on the
Yeah.
system.
So this is what SEBI is working basically to enhance the trust of investors.
Okay, great. So that is very good information for all the investors because there are so many myths among the investors regarding
Yes.
this.
So we have heard a lot of things. If I apply from my wife's account, the girls have more chance to get application.
Correct.
And if if I apply from my uncle's account. So it's all myth. It's basically a lottery system. If you are lucky, you will get it. Otherwise, you will not.
Okay. Why do some IPOs get heavily oversubscribed and some are undersubscribed?
So you have to understand two things. One is the internal aspect and second is the external aspect. Assuming a Zomato, you are using that company on a regular basis. There are a lot of other companies also. So brand visibility is one of the factors that comes for play in terms of subscription. So one is the basically a company's internal. The company is very good. Company's fundamentals are good. The brand is very recognized worldwide. Let's say with the pan India. So basis that application will come. Assuming second, if you come, then say example the issue is very good. The valuation is very cheap, then the people will basically, there will be a FOMO of being left out in the entire process and then they will apply. Now assuming a situation where marquee investor has basically taken a stake, so a lot of investors are there, we will not name it, but based on their name people apply.
Correct.
So companies, investors, the market, their brand visibility leads to this. And the fourth is basically external aspect, the bull market. If the markets are good, they are performing very well, even the average okay IPO will get a lot of subscription. So I have seen from 1 time to 1,000 times. So this range is very vast. So basis that market timing also it matters.
Yeah, so market timing plays very important.
Company market timings, fundamentals, the investor, what kind of investors are creating interest in your company.
Okay, so in India, most of the companies are preferring to bring the IPO at the time of Diwali, as we've seen that.
Diwali, so basically market is very cyclic. So before COVID, we had seen the Sensex to reach 27,000. Even just after second phase of COVID, the market has basically performed like anything. They have exploded. Since then, till December or mid of 2025, we have not seen the downfall. Now last 1 year is basically very tough for the market. So it's cyclic, and if the overall geopolitical situation is good, so if you remember post-COVID, the Ukraine and the Russia war started, still market was performing well. But since the second term of Mr. Trump, negative aspects are coming to picture. So it's all geopolitical situation. Your basically overall world economy level will affect your the market.
What does subscription data indicate?
As such, if the subscription demand is coming from QIB, so basically informed investors, then generally retail and the HNI public follows them. So as such, if the QIB demand is good, market investors are coming, it's a very positive sign for any company because they would have evaluated the entirety. Now we have to understand if somebody is putting the money, what is the quantum of that? Sometimes for 1,000 CR, 10,000 CR corpus fund, a small 10, 20 crore doesn't matter to him. So who is applying how much is also very important. Sometimes just to attract people, good investor applying very small quantum of money. So market investor with sizable amount, it's a very positive sign. If say generally now we have seen a trend where QIB portion is reduced and the remaining portion is basically allotted to retail and HNI. So in all such situations, the investor should know that this is a kind of tactic being played, and one should be very much aware that if 100% QIB demand is not being created, then there is something issue. You have to evaluate what is the reason for that, and then you have to take a call.
Okay, so the time range is the same for applying.
Everybody. So anchor will open 1 day before the IPO, and 1 to 3 days will be open for general public.
Okay, so on the first day, investor can observe how much quantities are applied from the QIB, and basis on that they can take the further decision.
So day 1, day 2 are generally dry. Day 3 after 11 AM you will see flooded application coming into the system because the banking part of the all the big investors is on the last day.
What factors should investors analyze before investing in an IPO?
See, as we have discussed in the earlier, the merchant bankers and everybody, they put a lot of efforts in creating a 400-500 page document. So the investor has to read all these documents. So there are key chapters I'll tell. One is the business chapter. This will give you the understanding of the business, understanding of the products, understanding of their suppliers, their customers, their geography coverage, where they are selling, what they are selling. So this will give you that understanding. Second, there is basically a promoter in the management chapter. Who are the key decision makers? What their past have been? What is their qualification? Are they the correct people for this company? What has been a growth trajectory for these guys? So management promoter, they play a very crucial role. Generally, we bet on the jockey, not on the horse. So horse will be basically commanded based on the jockey's instruction. So management's performance, their strength is very good. There should be very good. Then object chapter is there. Then one of the key chapter is basically a finance and the risk factor. So if you read initial 20 page, you will understand your risk appetite, whether we should apply in the IPO or not. For example, if company has lot of litigations, lot of non-compliances, promoter background is not clean, they have very limited experience in the company. So everything will be mentioned in the risk factor chapter. And again, there is a summary of DRHP within 30-40 pages. Will come to the entire gist of the DRHP. Instead of reading the very heavy book, you can go to the summary of the basically DRHP. So for investor, my suggestion will be to read books, do your own analysis, do not follow the GMP. So you will have heard a lot of instances where very good companies subscribe 100 times listed discount. So they have been a wealth eroder for the investors. So sound decision, following a very good market investor, their investment amount will be kind of metrics they should follow. Then understand the basically sector tailwind. So if companies into good sector, well performing sector, government policies are backing to those sectors. Very basically a kind of metrics an investor should use before.
Okay, so where can the investors can find this prospectus?
So every prospectus is available on the SEBI, is available on the merchant bankers website, available on the company website. But nowadays, a lot of third-party platforms are coming who will give you in 1-2 pages entire summary. So Chittagong is there, IPO premium is there. You can also evaluate the performance of the merchant banker, how many IPOs they have done, whether these are successful IPO, not successful IPO. So as of now, this is a very information era. What we see is it is just you have to interpret the information and take decisions. So finding information is now easy.
Okay. Next, how important are the company fundamentals?
So in long run, fundamentals are only the point which will sustain. So generally, what happens if the markets are good, sentiments are good, even the reasonably okay company will give you the good returns in a short term. But assuming a company they have come at a very high valuation, markets were good, within 6 months to 12 months you will see they will come to their fair price. So at the end, fundamentals matter. Their business, their sectors, their products, their customers, the financial strength, the management strength. So what generally we evaluate a company is basically based on their revenue quality, management quality, sound financial discipline in the company, and across the external sector tailwind will basically support the company. So if you are long-term investors, fundamentals are the only metrics will help you have a sound or good companies in your portfolio.
Are the loss-making companies suitable for the IPO investment?
So as we discussed in the first session, 6-1 and 6-2 route is there. If the companies are loss-making, their numbers are not good, but business is good. They have a scalable business. Now it is just that they have to convert these efforts into the numbers. So 6-2 route, yes, it is possible. What happens is these companies are basically VC or PE backed. They are kind of cash burning companies. So if we evaluate them on a other than financial metrics, assuming our IT company, we have to evaluate how many users are coming on their website, how many downloads they are having in the from their particular domain. So their metrics are different. So we call it KPIs, non-financial KPIs. So if the company is good, even though they are cash burning, they have a proper path to profit visibility. Then these companies are good for investors. Sometimes, so we have a very good example. If you say Zomato, if you say Lenskart, all tech companies, kind of startup companies we have seen, we have used their products, we are using them. So these are good companies. They got listed. They are now profitable. Even the same time, if you take Paytm, Paytm has the super solid sectorial tailwind because it was at the time of COVID, it was not UPI, it was Paytm Karo. So very brand was created for these guys, but they were not able to invest because their path to profitability was not clear. They were cash burning, they're still cash burning. So they're supported by a good fund, but now they are also taking their. So now, since they were not able to address the market, a lot of other players have come and they have taken the market. So understanding the product, understanding whether in how many time it will be running into the profits. So their general intention is basically to penetrate the market, create a market, create a tech, hire a good talent for the company. If this is clear, unit economics is clear, then I think these companies are very good. Now at a transaction level, if company is making loss, then it will never come to profit. Sometimes what happens, the gross margins are profitable, but your EBITDA is negative. When EBITDA is negative, it is a sense that yes, you have a profit, but due to higher cost or lower your quantum, you are not able to make profit. But if these quantums are increased, you will turn to profitable.
So there may be the chances due to the debt cost the company is making loss due to
So
high.
it's a EBITDA level. So when we say EBITDA level, basically it's before depreciation and finance cost.
Correct.
So just to evaluate any company on a parallel level, we use this matrix of EBITDA. So your debt is different than mine. The capex is different.
Correct.
But at operational level, if we are selling the same product, we should have same margin.
Okay. So on the basis of same
EBITDA,
industry, you can make a decision whether to apply in the loss making company. What are the red flags investors should never ignore in an IPO?
So just read first chapter, that is risk factor and financial information. You will come to know your risk appetite, why you should apply or not apply. Now, few things I will suggest is basically to read the financial information. If you see just before the IPO, numbers got spiked. Assuming before, just year before the IPOs, revenue was say 100 CR. Now their revenue is basically 170, 180 CR. That is 70-80% growth. Now before the IPO, they were struggling to get 5-7% of growth. So to understand how this growth has come, what was the quantum of related party transaction, whether this has come to a circular transaction. So generally promoters have few other entities, they will do a similar kind of transaction to inflate the books, to inflate the profits. So it's a negative sign for the investor. Second, say there have been a frequent changes in the auditor. Now auditors are never wrong. It is the promoter who force them or say kind of influence them. So at the end they will resign, right? So if there are frequent changes in the auditor, frequent changes in the key manager personnel, the assemblies are getting changed very frequently, then it's a negative sign. Then higher quantum of related party transactions. So in related party, the promoter can influence the price, they can influence the quantity. So these numbers are not good. Generally it is said anything less than 15-20% is a good basic acceptable range for RPT. Anything more than that, the numbers are generally not good. So these are the key things the investor should keep in mind.
What should founders prepare before considering an IPO?
So IPO readiness is basically what they should do is in an IPO the company will be evaluated since incorporation. So corporate governance, your financial book cleanup, your old records, minutes, statutory records, your legal records, documentation. For example, generally the agreements are not in place, so they are expired, not renewed. So everything will be checked. So it is a process of 3 months wherein your entire DD will be done, MIS will be created, everything will be tracked, and if things are not done, it will be done. Things are not done properly, it will be rectified. If there is a non-compliance, basically compounding or adjudication will be filed. So creating a board, identifying good independent directors for you, creating committees, audit committee, NRC, and then SRC committees are to be formed, CSR committees are to be formed. Then you should basically, if you are planning for IPO, you should know whatever amount will come to the company, what will be the utilization of that. How in best manner it will give return to me and to the investors. So a proper option for capex, then say working capital, say if you are trying to acquire any company. So those things has to be kept in mind, where I will utilize this money. And even say post listing, what is your planning, future planning for next 3-5 years. So generally investor will always come for a 3 to 5 years of growth. So there has to be proper path for any company to demonstrate for the investors what you have done in past, what you are planning for future. If your story is convincing, your story is basically if they are able to digest, they will definitely be part of your growth story.
So this more depends upon the whether the IPO will be successful or it will be fail.
Yes.
So this should be considered very carefully before you are going to the public.
It's a very strategic decisions.
Right.
So very important. So promoter or the IPO advisor should take time and evaluate what is the best possible option for the company to use these proceeds.
Is the right time for the company to go to the public?
So right time is basically there are two aspects. One is the right time from the market perspective and the right time for the company perspective. So for a company, right time should be always the right time. So once your numbers are good, you have a scalable revenue, you have next 3 to 5 years of growth story for which you are planning to raise capital, then your business should be ready, your numbers should be ready, your corporate governance, compliance, everything should be ready. Now this is in your control. Now second aspect comes is the market.
Correct.
So market is basically not in your control.
Correct.
So what generally we suggest is to initiate the IPO process.
Okay.
Then it takes a year's time to get listed.
Correct.
Now once SEBI approval is received within say 8-9 months, your approval and observation letter from SEBI is ready, is eligible for 1 year. So 12 months from the date of letter you can open your issue.
Okay.
So what we suggest every promoter, every advisor that you should start the process immediately irrespective of the market.
Correct.
So when markets are good, you should not be working on your things which was in your control.
Correct. Correct.
So be ready with your approvals. Now the major question the promoter asks कि मेरा valuation कम हो गया तो since markets are not good, you will give me current valuation.
Correct.
So SEBI has given the flexibility to increase your fresh issue size by 20%,
Okay.
OFS by 50%.
Okay.
So that bandwidth is there. If
Okay.
the market is good, investors are basically ready to put in the money. We have that flexibility to increase the valuation by 20-50%.
Okay.
Now in this current situation, SEBI has increased the even 20% size to 50%.
Okay.
So point is that you should be ready whenever the opportunity comes. You should be able to encash.
Correct.
So right timing will be always the market. Since we should be ready with the entire process of say 6 to 8 months before market turning bad or good.
Okay. So it's advisable to complete whatever in
You
your
should be ready with
control
the
and you have to be ready for the IPO. Okay. What are the biggest challenges companies face during IPO preparation?
So as we said, it's a very long journey, around 8-10 months. First thing we tell promoters, the founders, that you should have a very good team. Your focus should be to increase the business, present good numbers. Now IPO process, it should be you should have one good CS, you should have one good CFO who will be handling the entire task. It's a dedicated team who will be only working on these aspects. Now this is the internal part. So we say promoter, it's a patience game. You should enjoy the process because when they are not happy with the situation or any third party coming giving them suggestions that you should be open up your books, you should do this changes. Sometimes they are very constrained because they want everything to be controlled. Now they feel that control will go to somebody else.
Correct.
So we explain that you are the ultimate owner. You are the basically the decision maker. It is a part of the ownership you are giving to somebody else.
Correct.
Now for that, whatever process times it takes, you have to be ready with that. So you're flexible enough to understand. So it takes time from the promoters. So it's a big challenge to explain them, convince them. Now a lot of intermediaries are there. So disputes creation, any surprises coming in due diligence, so that solution comes. That becomes very big challenging task. Now, second important challenge is basically evaluation.
Okay.
So sometimes if say promoter has agreed for say 20 multiple, somebody will come and say, I'll give you 25 multiple. So then they will say, oh, 25 I have to 25. So this kind of discussion will go on. Even post listing, promoter would say, yeah, valuation बढ़ा दो. So we explain them that see, we have to keep proper space for investor to earn and create wealth for them. If they are making money, ultimately that your 75% will be always making money. So they have a kind of sense that I am getting very less, and investors always say, "यार ये तो बहुत महंगे में बेच दिया." So this is how we explain promoters की. So it's very challenging to explain them. So process is one task where team is not good. If the due diligence something negative has come up, for which promoter was not ready, nobody was aware. Sometimes what happens, huge penalties will come. For example, if company is not taken say PF number, not DSIC number, so employees law basically it's a criminal offense. So it will lead to a lot of finance outflow. Even you say compounding will come from ROC. So these things generally they are not happy, but once they understand the process completely, they agree at a later stage. But it takes time.
What role do the company secretaries and the compliance officers play in IPO?
So we generally say 50% is CS and PCS, no? Remaining 50% finance and other guys. But then it's very underappreciated what PCS and the CS is doing. So entire secretarial aspects is handled by them. So creating old minutes, creating all statutory registers, complying with the Companies Act, complying with the security law, complying with the LODR, sometimes complying with FEMA regulation also come under the secretarial aspect. Then once the IPO structuring is done, then the increase in authorized capital, then management structuring, board structuring, CSR compliances, all these are done by PCS form and with the help of in-house CS also. And even once it is basically till DRHP. During the process, there are n number of queries that comes from regulators. So answering those queries, addressing them properly is basically the task of the company secretary. Then even once company is listed, compliance officer becomes a nodal agency for the company. Whatever disclosure, whatever things are happening, even at some point of time, the MD will be asking you questions that whether I should do this or not. It's a very good opportunity for anybody to achieve that role. So we generally appreciate the PCS work and CS work because they are the kind of backbone or the process from the company's end.
What are the career opportunities exist in IPO and merchant banking domain?
So merchant banking and the IPO is basically very dynamic role. So assuming a company, whatever laws, compliances are applicable to them, you will be part of them. Be it FEMA, be it SEBI, be it ROC, MCA, income tax, sometimes transfer pricing, contracts act, whatever is applicable, you will be part of them. So learning will be very dynamic, not a particular domain. So you will have a 360-degree coverage of everything. Now this is, and we understand as of now the merchant banking and the IPO division has not come to its peak. A lot of things to come. So a lot of merchant bankers will come, a lot of companies will come for IPO. So very good opportunity for all the finance professional, the compliance professional, legal professionals. So on the merchant banking team, you will see from ECM side. So you have a very good role to prepare DRHP, do the compliance, get the approval. So it's from ECM side. Now you are very good at financial analysis. You are good at selling the equity. You can come at a placement side. You can sell equities to investors. Now this is for the merchant banking. Say if you are a very good finance professional, you can go on the company side also. You can play a PCS role. You can play a CFO role. Sometimes you can act as a research analyst. The research is very good. So in every aspect, finance, CS, legal professionals are required. Very good opportunity. We have a team of almost 30 plus into ECM, placement, research. So if you're good at your work, definitely, basically it's a sky's the limit in this industry. Only thing it's a cycling industry.
Okay, so last question from my side. What advice would you give to first-time IPO investors?
So closing advice, basically, as we discussed, reading is creating a reading habit, evaluating a company on your own metrics, then using a lot of parameters. So as of now, though, a lot of platforms have come. So understanding the company, its product, its industry, sector tailwind, its valuation, it's very key, important aspect while investing. See, it's very hard earned money for anyone. So assuming you are a good investor and you are keeping some money aside for particular, so the purpose should be very clear. If it's a listing strategy, even a small loss, you should book a loss and proceed. So capital liquidity is very important. Now, assuming it's a long-term investor plan, so assuming on the listing there was a loss, then you will not book a loss. You have come for a long-term strategy. You like the company. So for whatever objective you had invested, stick to that. Secondly, sometimes what happens on a fancy IPO, the FOMO is created. You put a lot of money. You put beyond your threshold. Assuming you have given kept 1 lakh rupees of capital, say IPO. Now somebody is saying it's a very good IPO. So in the hope of getting good allotment, you will apply say 2 lakh rupees, which was beyond your risk appetite. So restricting within the boundaries, applying on a very informed side is basically kind of suggestion I will give. Do own analysis. Do not rely on third party. Use tools to understand. Do a peer analysis. Find a good company similar to that, or find a company which is a market leader into that industry. How that company is comparable to my company. Whether this company has any moat. Finding a moat is basically a super challenging task. If you are able to find a moat, if you like the company, even if the company is not performing, fundamentals are good, you will love to be part of the company. So evaluate promoters, evaluate the founders, their business, products. So this kind of use the metrics to apply before applying the IPO.
Thank you very much, Sandeep, for giving such an insightful information and spending your quality time for this IPO related topic. If you have any query regarding this topic, simply write in the comment section. And if you wanted to take the corporate advisory service, or you wanted to bring the IPO, you can check the details. Valmiki Leela Capital Private Limited, which is SEBI registered, category 1 merchant banker. I have mentioned the link for contact links and the website link in the description box. Don't miss to watch the first part of this video. Stay connected for more videos. Bye.